Welcome to the Australian Property Investment Podcast. We tackle the big questions in property investing. Our guests are industry experts, and we're fortunate to pick their brains on the challenges that investors often encounter when growing their property portfolio. Welcome to the Australian Property Investment Podcast. Let's start investing. G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and I run a mortgage broking business called Atelier Wealth, where we specialise in helping property investors start out and scale up their property portfolio. And the idea behind each and every episode is to bring in a special guest, someone who is obviously qualified, but someone who has lived and breathed and walked the walk and does talking the talk as well. And that's why I'm really excited to bring in guests who fit the bill. And today's guest is Adrian Trimboli from Fresh Start Advisory. Welcome, Adrian. How you doing?
I'm doing very well, my friend. How are you?
I'm fantastic. Thank you very much. We'll get to you in a second, but before we kick off, the message is very, very clear. If you need advice, this show is not that. This show is a conversation not intended to give advice. So please do seek out a professional, paid, someone that can give you the advice guidance that you do need that's tailored and customized for you and your situation as well. But Adrian, I want to say welcome. And I guess, our paths crossed because I saw you across socials and I think you've got a very, very clear, clean message. And that's something that we're going to explore today. But before we do kick off, Trimboli, it's a very good classical Italian name. And I know you're down from Melbourne, so I know you're ticking a few boxes there. Tell us more about yourself. I know you're under 30 and you've already accumulated a really good property portfolio yourself and launched your business. So, mate, you're, I'd say, ambitious, eager, and, mate, from when we've spoken, I'd say quite humble in that regards as well, mate. So tell us a little bit about yourself and what I call the 3 Ps, a little bit about yourself personally, professionally, and then we'll get to your property journey as well, mate.
Yeah, so personally, I am a Italian boy. My family is very, very, very important to me. I still am with mum, right? So I still do live with mum and dad, and we're very, very close. So family's very, very important. I mean, if I'm honest, like even personally, all I am about is really family and my business. They're both my passion.
Yeah.
Professionally, obviously, we run, a buyer's agency. We help people. We help people build wealth through property, and the goal for us is to make property investing available and accessible for all Australians.
Yeah.
We've got a pretty cool team. We've got a team of 11.
Well
We've been in the business for 3 years. We are very, very humble, and I think I said it to you the other day that, we definitely we're as surprised as anyone to be where we are and kind of where we are going. And then,
surprised, I'd say surprised, but not surprised, right? Because you start out, obviously, everyone starts out in business to do well and do their absolute best, right? And give this a red hot crack. So for 3 years, I think we spoke about team, before we jumped on. And it's not necessarily the head count. It's not the size of the army that matters. It's the heart. And I think if you've got 11, but high quality, high caliber team players, excuse me, I think that says a lot about kind of what you're looking to build and the people that you're attracting. In turn, it's the clients that you attract and the kind of the message and the advice that you give as well, right?
Yeah, for sure. For sure. I mean, we are such a tight-knit group. I mean, our clients are tight-knit as well, right? Like we like to visit most of our clients, and obviously our clients are all over Australia. So we've got an awesome team.
Well done.
We've got an awesome team. And it's a fun business, right? Like every day I live out my passion. So it's awesome. It's really awesome. That's probably why I've done so well. Sorry, I cut you off.
No, mate, I think you and I are, a lot of our situations are similar, which is we get to see people, what they're looking to do. Everyone's situation is unique. You have no judgments on where they are, but where they're looking to go. And it's like pretty much, how do we help you get there? And when we're in that position, it's quite a unique role that we play in people's lives, isn't it?
For sure. Which is fun.
Yeah.
And then the property portfolio, I've made a lot of mistakes in my property portfolio. I sold, or in the process of selling a property, the first ever property I bought for $10,000 more 10 years later, or 11 years later.
Yeah.
So I've made a lot of.
Is that funny? Because I think I was very similar. I think Bernadette, my wife, she's like, sell that damn property. I was like, you don't sell your first one, and I don't think it did much. And I think it's almost it's part sentimental and part a reminder that you give yourself an uppercut that your first one either you're very embarrassed about or it does very, very well. What are the markers in business? 18 months and 3 years. And like, if you turn those corners, then you get to the 5-year mark. After that 3 to 5 year mark, things just got a little bit easier. Like, clients start to come back or the referrals start to kick in and, right, like it's just starting to get a little bit better. And if you manage cash flow and then start to build operations, and life gets a lot easier. I mean, we've just turned 7. I'm like, okay, the first 5 years, I felt like the hardest. 6 and 7 was tweaking, especially people. And then now I'm like, okay, life has got a lot easier. Business is predictable. And now I feel like now it's just less decision making. So less bad decisions. That's what that keeps the ships nice and steady. But yeah, it's a real, I mean, we're people delivery, right? People heavy, like yours business, our business. So it's the right people on board and not afraid to have those hard conversations sometimes around team and performance, right?
You're at 7 years now or 13 years? You've been in the industry for 13 years.
Yeah. So 7 years, and then 2 years before that, I had a Mortgage Choice franchise. So what's that? 9 years out of the, I used to work at CBA in marketing. So for me, it's 9 years out of corporate life. And no looking back, that's for sure.
Yeah, good on you, man. That's very exciting.
So Adrian, I think one of the key points that have stuck out to me, and I'm like a lot of people, I'm like realistic, it's quality over quantity. So not getting fixated on the number of properties that someone has, but I guess the quality on it. So you've been able to build your portfolio to 8, selling 2 down, and then that leaves you with a portfolio of 6. Now, statistically, that still puts you in the top 1% of property investors in Australia. If we use the ATO data that we've seen come out as well, and the Australian Bureau of Statistics, that less than 1% of property investors get to 6 or more properties. Now, I feel like that will change, off the back of COVID, with the rise of great buyers agents that are helping nudge buyers along as well. I'm almost challenged in that they've got the ability to grow their portfolios as well. But you mentioned before you've made a few mistakes and things have gone well. So why don't we start with what has gone well for you to scale up? Because I feel like there's that's probably where people get stuck in that scalability. They buy 1 or 2, and then it's that ability to grow. And then we'll talk about some of the mistakes, and we'll call it learnings that you've had along the way, mate, as well, if you want to take us on the journey.
Yep. Yeah, for sure. I think the thing that you probably don't hear too much is the actual real thing that pushes you along. It's your income, right? You can play it whatever way you want. You can say, you can buy this thing and it's going to yield at 55% and give you, like, a lot of that stuff is really risky. I just think if you just focus heavily on getting your income up to a level whereby the banks just keep wanting to give you money and money, that's why I personally think that I've gotten to 6 properties by the age of 28, right? Over time, sure, you buy the right assets and you plan and do all that stuff. You will get there if you're doing the right things. But personally, for myself, it's just being on a really good income. That's the I believe the most important thing. In regards to selection,
I mean, as someone that started investing from, you said 18 years old and now you're 28, statistically, this is the lowest income that you'll earn in your lifetime, right? So take me through, like, what's been your journey? And again, people want to know. Tell us, Adrian, how did you do it, and how did the income grow to enable you to keep getting the borrowing capacity? Because that's ultimately what borrowing capacity or equity are the 2 things that investors will run out of.
Yep.
So how did you push that income up? What was your story?
Starting a business definitely helped with that.
Yeah.
And really hustling in that business.
Yeah.
A lot of the properties I've accumulated have been over this period whereby I've had this business.
Yeah.
I also purchased property with my brother, so that was
nice.
a thing.
Yeah.
And we, the first property we ever bought, absolute nightmare, which we'll get into that. We actually paid down that debt completely. So again, we're not intelligent, but still we did something well with that, built out good equity. But starting the business and actually being on pretty good income From when I first was, from 18 years old, I was on pretty good income. I was in a corporate role. And yeah.
Okay. Talking about that, because you bought a property with your brother, I'm very careful when I typecast either genders when we go to investing, but I know there's a distinction between the way that the male investor mindset, sometimes the difference around a female, young and older. For example, investors have very, very different risk appetites. Culturally, we have a lot of Italian clients, and they're so pro property, and they've got no qualms with buying together, whether it's siblings, whether it's cousins, parents, and children. Italians have got a really good knack for co-purchasing. Is that something that you've seen? Is that something that gets talked about as a family? Where there's other cultures that definitely wouldn't go there, for example, with siblings, but Italians, I feel, are very pro-family property together as well.
When we were going to schoolies, my brother and I, my mum came up with this magnificent idea to, you guys, before you go, you're going to spend 30 grand, you're going to go buy an apartment, to our next suburb, right? The asset selection wasn't great, but the theory of you guys are going to start investing at 18 years old, we wouldn't have done it ourselves because we had our 9 schoolies. But yes, my mum, who actually has never invested in her life, I actually helped her purchase her first and second property for business. When we were 18 years old, was very, very hard on, guys, you guys start investing. And we've done many things with their family. We sold a house this year that me and my brother built with my uncle. So we're pretty lucky in that sense that we've got good people around us who care about us, even if they put us into crappy apartments that don't grow.
They're planting the seed. I think the role of a parent in that sense, the way that the money mindset, the fear around it, if parents can kind of challenge their children, for example, sometimes the decisions, my dad was always like, buy a property. I'm like, whatever, old man, but it's like, it has to come. That's a part of the big responsibility as a parent. You have to live and breathe it yourself, or really challenge your kids, and they're going to thank you for that later. And the ones that we've seen, the parents that have really been able to push their kids and help their kids, and are beneficiaries of that type of guidance and advice, really, isn't it?
Yeah. And like, some people will hear that and go, oh crap, I haven't got family that are going to push me into this. There's a whole world of property people that actually genuinely would help you, and you can learn off for free, right? Awesome. You don't need a family. Like, I don't, like, my partner, for example, she hasn't got family there that would help her do this. However, it's just as accessible and easy for her to do it, right? So for sure.
Well said. Perfect. So take me through. We'll just, interrupt your train of thought there, but talking about that scalability. So you started out, bought with your brother. First property wasn't the greatest, but that doesn't stop you. You keep moving onward. So take me through, how does the portfolio start to kind of gain momentum?
Yeah. So first property we bought together, we paid that off like pretty quick. My mother, again, helped me a lot with that. Surprise, we came up with the amazing idea, buy another property in the same block. Madness. That's actually the property that I'm selling now. And then the third property, again, you'd think, oh, these guys know what they're doing. We had no idea. Third property, kind of a nightmare as well. We bought a house, at least it was a house. We actually did get some good growth out of it. But we didn't do the research, and it's not the types of properties we would buy today, because we're just 10 Ks from where we are. And that, at that point, that's when we had, this is about 5 years into or 6 years into our portfolio. We had a property paid off. We had a really small loan on the second property that I bought myself. And then the third property, me and my brother again bought together. That's when it all kind of, it was a bit of a meltdown with that. I don't know how long you want me to spend on it, but there was a meltdown. The broker ran away. We had to come up with $360,000 to secure the property. Otherwise, I was going to lose my $60,000 deposit.
Holy smokes.
Just madness, right? And this is on my third property. So you would think, for the Australian stats and averages, that people who have 3 properties know what they're doing. We had no idea. We had no idea. From that point, that's when I dedicated every single waking minute to property. And that's kind of how I got into business. But for the next really 3 years, all I really focused on was just paying down the debt, which we ended up leaving with kind of no debt on one property, minimal debt on another property. And then that kind of led me into the next phase, which is when I actually started buying property correctly using the strategies we now use in our business.
Okay. So what changed? What when you did all your research, when you spent a lot of energy and effort retraining yourself around how to look and assess and analyze properties, what was the light switch that went off, or the penny drop moment that you go, hang on, I've been doing it wrong, and he's had to tweak it?
We paid people. We like, everything was always about free. We paid for coaches. This is Frank and I. I'm talking about Frank and I. Something similar happened to him. He got burnt by a professional. I put it in quotation marks. And that was the catalyst, because it both happened at the same time. That was a catalyst for us to both go into actually paying for assistance, not through buyer's agents, but paying, whether it was books, paying for actual seminars, paying for everything, and actually putting time and proper research into this stuff, as opposed to doing what everyone does and buy 5 kilometers next to where you live because you know the area.
That's, I think they call it like a confirmation bias or a home bias, right? Where most investors will buy within a certain radius of where they live, and it's what they know. And so you can't blame people going, well, hang on, I live here. I know the markers, and you've done it yourself, and you go, well, that may only get you so far when it comes to the investing journey. So looking back, if you were to kind of say these are, I don't know, I don't want to put a number on it, but your top 5 or 3 mistakes that you go, here's what I wouldn't do, or here's what to avoid. Off the top of your head, what are you thinking?
Definitely buying just where you live.
Yeah.
If you live in an awesome area, awesome. We kind of say now that 2% of properties across Australia are considered investment grade worthy.
Right.
The likelihood of that 2% being in your backyard, very, very low, right? That would be the first thing. Second thing, and I think this is probably the most important thing, aside from, the having good income and good borrowing capacity, is actually planning everything.
Okay.
One of the biggest things that we do, the first thing that we spend so much time on when a client comes on board with us, is we build out like a 10 to 15 year roadmap.
Awesome.
It sounds wankery. It sounds old man like, and what I probably would have said to my mum, or what you said to your old man, shut up, old man. But without it, you just end up going and, the lady in the red dress, if you watch The Matrix, you just see the next sexy thing and you just jump to that.
Yeah.
That was probably a big thing. And then third thing, spend 90% of your time researching, 10% of your time actually securing or looking and trying to secure the property. Research the whole way and let that take time. Even if it takes 6 months, do not buy a bad asset, because let's be honest, I've probably lost millions of dollars already by the age of 28 just from not understanding or not doing the right research.
Yeah, well said. Well said. The opportunity cost is a little bit hard to quantify sometimes. You go, well, I could have made better decisions. COVID, you could have made more money, when property prices boomed, and there's no way to know. But what got you here certainly won't get you to that next level of growth either, right? And I think the message that you got around paying, when you pay for something, one, you value it, but you've also got skin in the game, and also that person then becomes accountable to whoever you're paying. So you hold them to account, because you're now a paying customer as opposed to taking things for free, and you got to take it with a bit of grain of salt sometimes as well. So I'd say definitely add that to your list. To go back a step, you said something around there's only 2% or maybe around 2% of properties in Australia that would say they're investment grade. How do you get to that kind of number? And then what do you define as investment grade from your definition, mate?
Yep. So if you don't mind, I'll use kind of our business as a bit of an example here. So our buyers agents will look at anywhere from 800 to 1,000 properties a month. Okay. Of those properties, we will kind of get that down to about 100 that will pass our initial stage.
Yeah.
And from there, generally speaking, will actually be under 10, right? Under 10 properties, which we then go and say, hey, we really like these. We want to move on them and present them to clients, right? So that's a lot less than probably 2%. That's a lot less than 2%.
Yeah.
So that's what we really base kind of the 2% number or less than 2%, right? Obviously, there's a whole bunch of regions that we don't look into. That's that part there.
Yeah.
In regards to what we consider investment grade, it needs to be well above the Australian yield rate. So our average yield rate is 6% that we buy for now hundreds of our clients. And it needs to beat the Australian average growth rate. So Australian average growth rate is 7%. I mean, again, our averages sit around about that 13 to 14% year on year. That's how we kind of determine that they are actually investment grade. And then what we look for is something completely, but the type of assets we look for. I don't know if you'll get into that. But
no. I'm keen, because most people go, what are you rejecting that doesn't meet the bill, for example? Maybe it might be a client brief that's price, or maybe it's location, but you go 1,000 properties to get to, I think the next marker was 10. So what is happening to all those properties that just aren't getting a look in? Yep.
Things that people don't look at, definitely things I wasn't looking at when I first started. Level of public housing, level of owner occupiers in a particular street, level of renters in a particular street. Is it in an area whereby people are not moving to? What's the internal migration going on in that particular region? Like, there's this suburb things that we just do not cross, and then there's obviously the region that we'll just completely tick off. But really, it's the boring data stuff that no one looks at. However, if everyone listening, and even yourself, you think about your own backyard, there's going to be streets that perform better than other streets. There's going to be suburbs that perform better than other suburbs. It's the reason for that is a lot of these boring things that, we look into.
And I guess that takes time, energy, bandwidth, capacity, knowing what you're looking for as well. Because you put that data set in front of someone, they may not know how to interpret the data, but you're obviously spending that time and energy into culling and then shortlisting as well, right?
Yeah, for sure. And I mean, again, 18 years old, I wouldn't have even thought about this. I would have, even 23 years old, I wouldn't have thought about this. However, there are people that do think about this, right? Because it's their job, and the whole basis of the role and the whole way that the business continues to grow is based on the results and the results of their clients. So that's very much what we do, and how we, the only way that we as a business grows is by doing these boring things that no one else really wants to do, or don't have the ability to actually do it, because there obviously comes cost with understanding and finding out this type of data, right? It's not cheap.
Yeah, spot on. But one of the other things that I think when I researched you guys was around the 10-year plan. Now, that's something I'd say is fairly unique. I'd say most people do the initial buying spreadsheet, which is buy costs, cost to ongoing cash flow, yield, and then it's maybe like a projection around the growth. But to see a 10-year plan, it's exactly that, I think. Are you part of PIPA?
No.
Okay. I mean, I've been to a few PIPA events, and they're really pushing this message around trying to get people to hold for at least that 10, 12-year mark, because most investors will sell at that 5-year or maybe even less. And it's like they haven't realized the full potential of their asset yet. So why? And I hear you guys talking about a 10-year plan. It's like, this is exactly what more investors need, which is that roadmap for that next year, 10 years. We go, okay, mate, stay on I know you might get either look at shiny objects or some other way to invest. And it's like, we bought this, we need to stick. Do we stick to the game plan for the next 10 years? And what does that entail as well, mate? So take us through a little bit about the methodology, the mindset behind the 10-year game plan.
Yeah. So, I mean, it is exactly that, right? It's everything over time is compounding and compounding and compounding. I actually made a video on this just before we're having this chat, and it's going back to people going off to the red light, to the shiny red object, the girl, the woman in the red dress. Our methodology is holds literally forever. Now, I will privy that with obviously clients who are 50, 55, they come on board, they need to make a real big impact, they need to buy a property, and in 5 years' time, they need to sell that property. Awesome. That's a different strategy.
Yeah.
For most people under the age of 45, realistically, they should be going into this and going, buy a property today, I can hold this property for 10, years at a minimum, really hold it on for life. Why ever get rid of an asset? This is my personal belief. Why ever get rid of an asset that is growing for you every year, that is providing more and more cash flow for you every year, and something that you can pass on to other generations, your kids, your grandkids. But to go, really, the 10-year plan is really to remind our clients and our people, and even we use it for ourselves, that this is a long-term game. Property is not you buy a commercial asset, you make $300,000 there, you buy an NDIS house, you make 300, and then that's it, you're done. That's just sexy stuff that I think sells and does work as well, right? But it is, generally speaking, you speak to the best investors ever. It's accumulated through 10 years, 20 years, 30 years, 40 years.
Yeah, well said. And I think your point there around intergenerational wealth isn't a message that gets talked about a lot. You think about, we talk about property prices now, and I don't know, you're still fairly young, mate. I've got 2 small kids, and any parent I speak to worries about what the future is going to look like for their own kids to buy. I'm like, well, hang on, if we're not starting now, by the time our kids go to get into the market, you don't even want to know what these properties are going to cost in 20 years time, for example. And so, well, are you planting the seed financially for them now, or are you setting yourself up that then you have the means and the ability to then help your kids? Because that whole put the mask, gas mask on yourself before you help others. Like, you need to help yourself financially to be able to help others as well. And so, building intergenerational wealth through property. I mean, in a single generation, someone can come to this country, buy a couple of really good high quality properties, and completely change their bloodline's financial future. I'm like, I get blown away by what this country has on offer. For people that want to either take a risk and get the rewards for it as well. And I think that's something that I feel it doesn't get spoken about, which is play the long game, and then you'll get the rewards for it later in life, which is a little bit of the whole delayed gratification piece as well, right?
Yeah, for sure. For sure. I think, again, this is the video that I just made before. If you gave everyone a contract today and said, hey, in 20 years time, you're going to be a millionaire, you just sign this, you just got to wait and you've got to hustle every day. I think there'd be a lot of people that may sign it, may not sign it. It's maybe too long, right? But if you just stick to it, don't get distracted, just focus on doing the right, simple things. I think over 10, 20, 30 years, you will get there. And exactly to your point, over time, you're then going to start, things are exciting. You start helping your kids, which then maybe you might be the person to help your kids' kids, and just change the dynamic of your entire family forever if you just stick to the principles, work really hard, and just do it for a long, long time. I think, there's a lot to do about. You don't have to be. It's quite simple, I believe, to be successful in property investing in life. It's just doing things for long enough time and just outworking everyone else who would get distracted.
Well said. One of the things that stuck to me, and I guess I get sad when I hear about someone's mortgage broker doesn't deliver, and you said your broker ran away, and then people get missold a property by a buyer's agent who maybe they got caught up in their marketing funnel as well. So take me through building out the dream team. Obviously, I'm not trying to plug you or us. I don't care who people use, as long as they use someone high caliber, high quality, investment savvy. So take me through, how have you gone around building your team? I'm talking about your property dream team, for example, and how has that kind of evolved over time as you've grown your portfolio as well, Adrian?
Yep. Like I probably said to you the other day, I haven't got it all worked out still, right? We're in the process right now of moving accountants because our accountant was not savvy enough, right? That's probably the last piece to my dream team, my property dream team. But like it starts from like the simplest of like a building and pest inspector, having like an A grade building and pest inspector who will walk you through the report. But this has taken years to build out, right? I've like literally I've been in this business, and we've now helped hundreds of clients purchase property. We've gone through a few people in that time, but accountants, depreciation specialists, property managers, having a broker is dare I say the most important. A broker and accountant is probably the most important of your entire team. But dare I say, like you really need to treat your team as a profession, and you need to cycle through them, I believe, to find the perfect person or the perfect team. And don't ever think that you've always got it all worked out, because again, we buy hundreds of properties a year. I still don't have it all worked out. So it's, if you make mistakes, because that's I think you have to.
Yeah, well said. So if someone's listening, they go, look, what's some of the good, intelligent questions that I can use to filter my team? So I'm filtering for quality and savviness. What are maybe some of those questions that you're going, hey, mate, this is something that someone that's on there with their A game, they should be able to answer as well. So how are you filtering?
Yep. Yeah, good question. Personally, I always like someone who has got a portfolio. If you're trying to build a portfolio, right? Yeah. I always like someone who's got a portfolio. So your mortgage broker, personally, this is for myself, I don't like to work with someone who has got 1 or 2 properties, but they're telling me how to get to property number 7 or 8 or 9.
Right.
That's me personally. And I say the same with an accountant. You cannot go to just a general accountant for a property if you're trying to do something big, right? If you're trying to buy 1 or 2 properties, awesome. A general accountant will work. But I always like to have every single person that I'm working with. Now, sometimes it's not always possible, right? A property manager, you don't expect them, or a building and pest inspector, you don't necessarily need them to have 6 or 7 properties, right? But just having properties from, your 2 major guys, your or women, your accountant and your broker, to have portfolios, super important. Asking that question, right? Asking them if they get any incentive for putting us in a particular, I don't know, I'm talking about even your buyer's agent, if they get any incentive in pushing you towards a certain property or a certain region. Your property manager, how many people are they working with at the one time? When can you expect a phone call back? If you're like, have they got rules around that? Building and pest inspectors, how many properties have they worked on? Like, there's a whole bunch of things that you really can ask. I think a lot of it also does come down to gut feeling. Like, is this person going to be really honest and raw with me?
Yeah.
And are they going to be looking out for my best intentions? But yeah, I think the biggest piece, if I can just leave it with one thing, your broker and your accountant, they need to have a portfolio, and a decent one, because they already know how to get there themselves. Hope that answers the question.
No, it definitely answers them. I really appreciate it. Appreciate your time as well. I know you. There's a lot of stuff I can hear you thinking from here, mate, because you can see your mind just working over. And I want to say, well done. Being in business and growing your own portfolio says a lot about tenacity. Says a lot about where you're looking to go and grow as well, mate. So I want to say congrats to you and your team, and onwards and upwards, man. I see a bright future for yourself, mate. Young bloke, mate. The sky's the limit, mate. So keep it up. Well done.
Thank you so much. I really appreciate it.
So if you're keen to have a chat to the team at Fresh Start Advisory and Adrian, we'll include the details to their socials and their website, so you can reach out. Like I said, I think you just mentioned it before. Do we work in conjunction with anyone? We paid for this, and the answer is no. So that's another, I guess, a filtering question is any referrals, recommendations that you paid for this. Look, it's a normal way of doing business, but you just want to make sure that's open and transparent. So I just want to say that that there is no commercial agreement here. Anyone to bring onto the show is like I say, best in breed, and someone that's willing to share their knowledge and their own experience as well. So Adrian, I want to say thank you for being open and transparent with your own portfolio and your experience, mate. Thanks.
Thank you so much, my friend. Thank you very
much. Beautiful. That's a wrap for another episode of the Australian Property Investment Podcast. If you found that helpful, leave us a review. That really, really helps to kind of boost the show and get us into more people's ears as well. Otherwise, if you do have a question, even better, because we love getting questions from listeners that they want answered in future shows as well. So help us help you in that sense. Until next time, I'm your host, Aaron. Take care. We'll chat soon.